Good afternoon, ladies and gentlemen. Today, we're going to delve into the fascinating world of Fibonacci trading. But first, let's take a step back and explore who Fibonacci was and why his mathematical discoveries are so important in today's financial markets. Fibonacci, also known as Leonardo of Pisa, was a renowned Italian mathematician who lived in the 13th century. He is best known for his sequence of numbers, which has been used for centuries to describe patterns in nature, art, and even the stock market. In this presentation, we will be focusing on how these numbers can be applied to trading and how you can use them to make more informed investment decisions. Leonardo Fibonacci, also known as Leonardo of Pisa, was an Italian mathematician who lived during the Middle Ages. He is best known for introducing the Hindu-Arabic numeral system to Europe, which replaced the Roman numeral system that had been used for centuries. Fibonacci's most famous mathematical discovery is the Fibonacci sequence, which is a series of numbers where each number is the sum of the two preceding numbers. This sequence appears throughout nature and has many applications in science and mathematics. In trading, Fibonacci numbers are used to identify potential levels of support and resistance, as well as to determine profit targets. The golden ratio is a mathematical concept that has been used for centuries in art, architecture, and now, trading. In trading, the golden ratio is used to identify potential levels of support and resistance. This is because the ratio of any two adjacent numbers in the Fibonacci sequence approaches the golden ratio, which is approximately 1.618. Traders use the golden ratio to identify trends and make profitable trades. For example, if a stock is trending upwards, a trader may use the golden ratio to identify potential levels of resistance where the stock price may reverse. Conversely, if a stock is trending downwards, the golden ratio can be used to identify potential levels of support where the stock price may bounce back up. Fibonacci retracement is a popular tool used by traders to identify potential levels of support and resistance. It is based on the idea that prices will often retrace a predictable portion of a move, after which they will continue to move in the original direction. To apply Fibonacci retracement, traders first identify the high and low points of a price move. They then draw horizontal lines at the key Fibonacci levels of 23.6%, 38.2%, 50%, 61.8%, and 100%. These levels are used as potential areas of support or resistance where traders can look for buying or selling opportunities. Fibonacci extensions is a powerful tool that traders use to identify potential profit targets. It works by identifying levels beyond the initial trend, where the price may potentially move towards. These levels are calculated using Fibonacci ratios, which are based on the key numbers discovered by Fibonacci. For example, if a trader identifies a trend and wants to know where the price may potentially move towards, they can use Fibonacci extensions to calculate potential profit targets. By plotting the Fibonacci ratios on a chart, they can see where the price may potentially reach. This can help them make more informed trading decisions and maximize their profits. In conclusion, we have learned about the fascinating history of Fibonacci and his mathematical discoveries, as well as how these concepts can be applied in the world of trading. The golden ratio and Fibonacci retracement and extensions tools are powerful methods that can help identify trends, support and resistance levels, and potential profit targets. By incorporating these techniques into your trading strategy, you can gain an edge in the market and increase your chances of success. So don't hesitate to try out Fibonacci trading for yourself and see the results firsthand. Thanks for watching. Like and subscribe, and we will catch you on the next one.